What do you make of this market here? We had a little punch into the close. Does that give you some confidence that we've sort of settled down our worries about the trade negotiations? Earnings are good, feeling a little positive going into a new week?
Well, I mean, Courtney, everything's falling into place. Good employment numbers. China growth is coming through. I think the big surprise Bob Pisani just talked about, Europe is growing as well. So all the pieces are falling in place for a year-end rally. Good earnings, better than expected. So, we're going to grind higher. We've got some headwinds for 2020, but right now in the fourth quarter, this looks pretty solid.
Josh, what do you think about the small caps there? I mean, we saw the Russell 2000 up 1.75% today.
Yeah, so I think the small caps have been one of the sore spots for this market. You can throw in the transports, you can throw in the financials, but a lot of these things are starting to resolve to the upside. They were the things that the bears had been pointing to. They would say, okay, new high, but breadth is bad. Okay, new high, but transports aren't confirming the industrials. And you would hear this litany of reasons why you should be out because of things like internals and breadth. And again, those things are starting to resolve themselves to the upside. To me, though, more important than whether or not transports look good or the Russell on any given day is what's happening internationally. You want to see new highs coincide with and confirmed by the MSCI indices ex-US. And that is the story of October to me. Emerging markets look good all of a sudden for the first time in a long time. You're seeing big moves in the Japanese stock market. When you have the U.S. working on its own, it's one thing. But when you get that synchronization, historically, that's been good for forward-looking returns 6 months out.
The Nikkei in Japan has been red hot the last couple of months. I want to ask you, you might not like this.
Not great, by the way, even with not great data.
No good data.
No good data in Europe, and yet, big rallies in German stocks.
This question sort of falls into that, Josh, because we are 13, if you're counting at home, we're lucky 13 points away from an all-time high in the Dow. That's it, just 13 points. And I know Josh and Karen, professionals do not look at the Dow. I get it.
I do.
You do? Good. If and when we make that new high, it'll be on the cover of, the USA Today and the nightly news. Does that help?
Can I tell you one thing that maybe you should know?
Yes.
Number one, the Dow and S&P end up in the same place. So a lot of people quote S&P because they think it makes them sound more sophisticated. It's actually the same thing. But within any given year, it's not. The S&P is outperforming the Dow for only one reason, and it rhymes with schmoing, okay? If Boeing is not going through what it's going through with the tragic situation, the Dow, we're talking about 30,000, right? Like we're having that
because
conversation.
It's a price-weighted index. It's the heaviest price. It's the biggest price.
So it's a $300 stock, but it matters a lot.
You get my point, I think, which is that when we start to see general news outlets, not CNBC, the NBC nightly news with Lester Holt, talk about record Dow, does that bring new people back into the market?
I hope not.
Is there an upward? I'm not for good or bad. Maybe it is bad.
I feel like that always signals that when it used to be the Time magazine cover was sort of the ultimate, peak.
Don't be on the cover of Sports Illustrated. Yes, you're going to blow your knee out.
The ultimate peak. I mean, to me, this is fun with big rally and everything's working. And when you're long, when you're forced to be long, that's good. But protection, you got to own protection here. The volatility is so low and it just gets lower every day. It's cheap. It's a good time to buy protection.